Manufacturing hollowed out. Financialization replaced production. Then came 2008, the global financial crisis. Banks collapsed. Markets froze. Trust evaporated overnight. The US responded by creating trillions of dollars. Quantitative easing saved the system, but at a cost. The world learned a dangerous lesson. The dollar could be weaponized and diluted at will. Confidence survived, but it was no longer unquestioned. Sanctions as financial warfare. Over the last 2 decades, the dollar transformed from neutral medium to geopolitical weapon. Countries were cut off from SWIFT, dollar clearing, global trade, Iran, Russia, Venezuela. Then in 2022, something unprecedented happened. Russia's foreign reserves were frozen. Hundreds of billions, untouchable. And that's when the world asked a terrifying question. If reserves aren't really yours, are they safe at all? Raising rates. The Federal Reserve raised interest rates aggressively. This strengthened the dollar, but crushed emerging markets. Debt crises erupted globally. The fix created new fractures. Digital dollars and CBDCs. Central banks proposed digital currencies. But digital control does not equal trust. In fact, it often does the opposite. Friendshoring and trade blocs. The world fragmented. BRICS expanded. Local currency trade increased. Gold purchases surged. Not because nations hated the dollar, but because they feared dependence. Every reserve currency followed the same arc. Expansion, overreach, debt monetization, loss of trust. The British pound collapsed after World War II. It didn't vanish overnight. It faded, quietly, gradually, then suddenly. The dollar shows the same symptoms. Not collapse. Erosion. This isn't about apocalypse. It's about redistribution of power. Higher inflation for Americans. Higher borrowing costs. Reduced geopolitical leverage. A multipolar currency world. Trade becomes fragmented. Growth slows. Volatility increases. The world becomes noisier. 3 key takeaways. Reserve currencies don't fall because of rivals. They fall because of internal excess. Weaponizing money accelerates alternatives. 3. The dollar's decline won't be sudden, but the consequences